Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Thank you so much for joining me in today's video about a stock to flow model update, where we are in the stock to flow cycle and what to expect going forward beyond which particular price points. Subscribe to the channel for more videos like this in the future. Let's dive into the video after our quick sponsor. Our sponsor for today's episode is Ledn.io. Ledn offers a wide variety of financial services for long-term holders of digital assets. Ledn helps you do more with your Bitcoin through their Bitcoin savings account, their Bitcoin-backed loan program, and their B2X program. Their Bitcoin savings accounts let you earn 9% on your USDC and 6.1% on your Bitcoin. With their Bitcoin-backed loan program, you can take out a stablecoin or dollar loan off of your Bitcoin, which is much more tax efficient to keep your Bitcoin exposure while gaining dollar liquidity. And through Ledn's B2X program, you can double your exposure to the Bitcoin you already own. Check out the link down below in the description and do more with your Bitcoin today. Awesome, let's dive right into the video. So Bitcoin has been consolidating inside an extended sideways reaccumulation area on the macro scale. So this has been macro reaccumulation at highs. And what's interesting about this reaccumulation is, of course, this being the range low here. You can clearly see that the high 20s were the range low and the range high being the 60s. And now we're on the cusp of breaking to new all-time highs. We're trying to still figure out that price positioning relative to this final major resistance area, but we've performed its highest, Bitcoin's highest weekly candle close. So it's a positive development so far. But now we've been in this reaccumulation area just below a also sideways flattening out stock to flow line, which is the 365-day average. And this is really interesting because this is the range high, right? 60k roughly speaking, but it's approximately confluent with this sideways stock to flow line. And the thing about this stock to flow line is that it doesn't tend to flatten out across time too frequently. You can see here across time, it has been an inclining stock to flow line for many years, and even here where the incline was a little less steep, still it was inclining here as well. But this of course was the last time that we saw flattening, though inclining still a bit. But nonetheless, the fact that we're seeing this flattening here is an important thing towards dictating the bull market, or at least the bull market peak. When should we be roughly more cautious about the bull market peaking? So above all else, this price point of $78,500 is the flat 365-day average. And as you can see across time, deviations beyond the stock to flow line, whether it's flat or inclining, doesn't really change for this principle that upside deviations beyond the stock to flow line tend to precede bull market ends. And of course, in mid cycles, this stock to flow line can actually figure as a support in the same way that the stock to flow line can actually figure as a resistance here as well. You can see resistance, but here it's actually figuring as a support. So if we're in this confluent resistance area of 60 and this being 73, roughly 78.5, apologies actually, this is a confluent resistance area on the macro scale. Of course, you can see that these two price points, the range high of this reaccumulation range being 60, approximately 65, and 78.5 being the stock to flow line, these are quite wide price variations, but on the macro scale, it's a really confluent area of resistance that Bitcoin needs to breach in order to start its upside deviation beyond the stock to flow line, which then starts the clock for the bull market peak. And that's when we need to become more cautious as we see that trend acceleration, which will last a while. It won't just end the moment it upside deviates, but nonetheless, really important to understand that upside deviations don't last forever. And it's really important to just pay attention to enjoying the upside deviation, the trend acceleration, the extreme FOMO, euphoria that you see in the market, but nonetheless still being level-headed about it and paying attention to the data science, which suggests that upside deviations do occur and they precede bull market peaks. So once Bitcoin is in price discovery, really important to just pay attention to the data science and not just one model. The stock to flow model is really useful, but there are many other models that you can build a cohesive picture of understanding to just try and estimate when the Bitcoin bull market peak will occur. And that's what I'm going to be talking about in my new Bitcoin investing course, which you can pre-order now. Check out the link in the description down below. I'll be sharing more info about that course going forward over the coming weeks. But in any case, that's about it for today's video. Subscribe to the channel for more videos like this in the future. Like the video if you enjoyed this one. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.